Welcome to Minding My Own Business. These are webinars presented by the Fremont Group. My name is Dirk Dieters. I am the Executive Director of the Fremont Group. I'm also the author of a book named Minding My Own Business. These webinar series are based upon that book and upon the 6 responsibilities of the small business owner. Today's is our second of those responsibilities, creating cost controls. Unfortunately, today, before we start, we do have to address the immediate issues that all of the businesses here in 2020 are facing. Our office has long time had an expression, man plans and God laughs. We know you've all been doing lots of planning and you've all been doing lots of work, and then God has laughed at us, and we have a virus here that is causing a total disruption of the business cycle and of all individual businesses. We've been a little bit behind in presenting our workshops because of dealing and helping our clients address the immediate effects of the coronavirus. There's not a lot else to say, but at this point, it's even more important that you focus on your business fundamentals, and we've advised all of our clients to do 2 things in particular. Number 1 is to revise your cash forecast daily, not weekly or monthly. Revise it daily to make sure that you can maintain a cash position. And number 2, to realize that you can only keep your budgeted percentage of labor regardless of your sales. And you may think you're helping some employees by keeping them on, but if it causes you to go out of business, you haven't helped anybody. Fortunately, there are some government programs that appear to be stepping in, and we will be advising our clients on those extensively. But in the meantime, it's all the more important that you keep the business fundamentals in line. The Fremont Group is a nonprofit organization. We support small business owners. This webinar is part of our bi-monthly series that addresses the 6 responsibilities of the small business owner from my book, Minding My Own Business. Fremont Group provides workshops, one-on-one workshops, by the way, and you may find them in your area soon. We do a lot of management consulting, mentoring, and coaching. We also have an accounting division and do outsourced accounting for many of our clients. There are 6 responsibilities that you have as a small business owner. The first is to make a minimum mandatory percentage of profit. That was the topic of the previous webinar. This one is your second responsibility, and that is to create cost controls to assure that that minimum mandatory percentage of profit is produced. Your third is to create an organizational structure to enforce those cost controls. Fourthly is to sell, both internally and externally. The fifth is to keep the money that you make, and your 6th responsibility is to have fun. So let's start examining your second responsibility, the creation of cost controls. The fundamental bedrock of all cost controls and of all financial control of your business lie in 2 different tools, management tools. These are your responsibility to have and to use. Then your cost controls must match the profit needs so that they are properly aligned. Then can they be delegated to key employees? How are they going to be enforced? And how will they be monitored? The last 3 are addressed much more in our organizational structure webinar, which is the next one, empowering employees to enforce those cost controls. And we're going to look very carefully now at using your 2 critical tools for management control. You're kidding yourself if you don't have and use the 2 key tools for basic financial management of your company. You cannot have financial control of your company, nor can you create effective cost controls unless you have these 2 basic tools. First is a budget. Second is a cash flow forecast. The budget was discussed in our first webinar about earning a minimum mandatory percentage of profit, and it'll be discussed again throughout many of the webinars, particularly in organizational structure, and on a separate webinar regarding budgeting. Suffice to say that this is your financial plan. What is a budget? It's a financial plan designed to produce a predetermined desirable result. It's not, I can't go out to lunch tomorrow because I'm on a budget. It's your financial plan to produce your profit. It details how you earn your minimum mandatory percentage of profit and provides your basic roadmap for its accomplishment. The cash flow forecast is just as important. It projects your projected cash position for at least the next 6 weeks. You need to know, how much money do I have in the bank now? How much will I have next Friday, the following Friday, the following Friday, and so on for at least 6 weeks out, so you can catch all of your recurring expenses and project out where you're going to stand for each of those 6 weeks and be able then to make adjustments if it looks like it's going to fall short of where you want to be. In a nutshell, your budget is what you can afford. Your cash forecast is when you can afford it. Imagine this is simplification, but imagine you've got a secretary and he makes $30,000 a year, and based upon that, he knows he can this year buy, I don't know, a new car and some furniture. Well, he knows he'll be able to afford that over the course of the year. That's what the budget will tell him. Cash flow forecast is, well, he can't buy it all in January because his money comes in over the year. So it tells him when he can afford it. It's the same thing with business management. If you don't have an effective budget and cash flow forecast, you're just guessing or operating by your gut. It may be very good, but it's not delegable. You cannot bring other people in, and you can kid yourself, and you don't have financial control of your company. You're just guessing. If you don't have both an effective percentage-based budget that you actually use and constantly revise, not something you just created at the start of the year, put numbers on a page and said, oh, we're not on a budget. No, something that you're actually using in your management of the company and that you're constantly reviewing and revising, then get one. If you don't have a cash flow forecast predicting your cash position at the end of each week or at least the next 6 weeks, then get one, because otherwise you're simply working in the dark. If you work with one of our success partners, you can together develop these tools. They will teach you their use and implement systems, procedures, and controls for their ongoing use. I would highly recommend that if you are missing one of these two, call us, 303-338-9300, and get an initial consultation set up with an action plan that will develop these tools for you. To use the tools effectively, you must utilize them in the creation of your cost controls. Your basic cost control is your budget, but then what you're going to delegate to your employees, and your key employees in particular, are portions of that budget. And as you'll see in the next webinar, they're used as the basis of your organizational structure. They will create accountability in your employees. Over and over again, we hear that your employees are not being held accountable. Of course they're not being held accountable because you haven't told them what they're being held accountable for and have a monitoring system to make it work. And you cannot have accountability without incentives. What you have to realize is that you have a contract with each one of your employees that says, I'll give you X number of dollars on every Friday if you will give me Y results in exchange for them. Very few people define the results, and then they complain that their employees don't produce. That's because they can't hold them accountable because they haven't been given a standard of production that they're expected to produce. However, the second part happens, oh, well, I'm going to incentivize these people. Okay, but what are you already paying them for? If you are simply creating an incentive plan that pays them more for what they're already being paid to do, you're just creating another cost, and you're not creating an incentive. The incentive plan has to also be based upon your budget, what their expected level of production is, and only pay cash incentives for exceeding that amount. They also define your job. What is your job? Your job is to make that minimum mandatory percentage of profit. You do it through the numbers that you put, the percentages you put into that budget that you're constantly revising. And By doing that, you are doing your job, which is to make money. We will show you how you tie your compensation to doing your job. You don't create a sales plan that's going to produce sales that don't reach your break even. And how silly would that be? You don't create standards for employees that won't produce the needed results. You don't pay a bonus to an employee for only producing the result for which you are already paying them. Those things don't make sense if you really stop and think about it, but they're done every day if you don't have an effective budget process and use of that budget developed and constantly revised. Your company's financial plan, which is your budget, defines the results that are needed in each different category. You can then communicate those results and empower key employees to control that result. As you will see, this creates systems of accountability and the basis of incentive programs. It's critical that your plan have a strong basis in reality and that you are constantly monitoring that plan and adjusting it as necessary. You have to be not only reasonable, but your budget has to be based in reality. It's nice to say, oh, we're going to keep our employees to 20% of gross revenues or whatever. When you've never done that before, you can't do it, and it's not even reasonable. And so you have to make sure that it's a reasonable amount. On the other hand, if any result is not produced, you'll have to decide whether or not they've given you a reason why it hasn't been produced or an excuse. And if it's a reason, you need to revise your budget. If it's an excuse, you need to revise your employees. That's what the effective use of your company budget can do. It can create an objective standard for you to run your company by. If you aren't doing that, you need to do it. This is the rudder that gives you financial control of your company and of your results. Don't be rudderless and rely on hope. Delegation, monitoring, and reporting are covered much more in the third webinar, which will be addressed in mid-May. Today, we do need to focus on the development of the cost controls themselves, the budget, the identification of your KPIs, which are your key profit indicators, and that's the groundwork that is required of you first before you can actually get to your employees. You have a job to do, and you have to do your job before you can complain about your employees not doing their job. There's a simple task that we do with our clients and creates a general guideline on how you would develop KPIs in your budget. And that is to go through this exercise. Imagine that your business is 1,000 miles away from where you are and that you could never go there. Ask yourself, what information would I need to have daily, weekly, and monthly in order to maintain complete control of that business's results? Remember, you can never go there, you can't see it. What would you have to know and when would you have to know it to be able to manage the business remotely? Frankly, this is something that may come up even more and more often as more and more people start working from home. This is the exercise that you complete. And if you had a success partner at TFG, and then you would therefore together with them, you would identify your KPIs and create the reporting and monitoring of those as required. It also makes your business much more valuable. It's a business that produces profit and cash flow from its systems, procedures, and controls, which is a much more valuable business than a business that relies upon the daily meddling or gut feel of the owner. Someone can't buy your gut feeling, but they can buy a system that is producing cash flow and profit. Also, it becomes much less labor intense on your part. I don't know what your volume is right now, but I suspect that there are people out there in your industry that are doing 10 times your volume. You're working 50 hours, 60 hours, 70 hours a week. I promise you, they're not working 500, 600, or 700 hours a week, despite the fact that they're 10 times bigger than you. What they've done is they have learned how to use systems, procedures, and controls rather than having to intensively manage the business themselves. Ask yourself where you want to be. In summary, in order to have financial control of your business, you need to have and use two basic tools from which you develop your cost controls. You need a variable budget, which is a financial plan designed to produce a desired percentage of profit. You need a cash forecasting tool to monitor your projected cash position for a minimum of 6 weeks forward. But just like the times we are in, man plans and God laughs. Your budget and your cash flow aren't supposed to work. People will develop them, and then when they aren't right, they think that they were a waste of time and didn't do it. You are wrong. They are merely the plan. God is going to laugh at your plan, and things are going to go wrong, and things are going to change. What they do is identify when you are off your plan so you can make immediate adjustments to either get back on your plan or realize that you have to revise your plan. In these times, many of our plans are being revised. That's why you need to have updated your cash flow on a daily basis, and you need to constantly revise your budget. You may not have the same financial plan this year that you had last year or next year. You can't just take your budget and say, I want to increase my sales by 10%, and so I'm just going to put these numbers into it, and that's what I try to hit. No. You need to budget percentages. You need to do it on a variable basis and constantly monitor your results so that you know when you are on or off of your budget so you can make immediate adjustments. If you're not doing that, I don't know if we'll be able to talk with you next year. I hope we can. You can reach us anytime. My name is Dirk Dieters. I'm at 303-338-9300. I'd love to talk with you. At this current time, we are giving initial consultations without charge, and we will soon be starting up our Minding My Own Business workshops as individual workshops, again to address the times that we are in. Don't panic, look at your budget, make daily adjustments, and get help. It helps to talk to somebody, and I hope to hear from you. I'm an admin at tfginfo.org or 303-338-9300. Give us a call. Love to talk.